Hey guys, this is Dennis Wolverine, the Active Trend Trader, founder of ActiveTrendTrading.com. You may be wondering, why in the world is Dennis looking at a list of the S&P sectors? Well, one of the reasons is because all the sectors are in the black today. This is the 26th of May, and the market is rallying. But the big question that I have for you, there's the end of the day, is if you jumped in a trade over the last couple of days, where will you take your profits? If you haven't defined, I'll give you some ideas today in today's session. And let's go ahead and jump right into it. Just a real quick reminder that all the materials we do present are for trading purposes. Traders should always pay for trade any new method prior to the risk of their own personal capital. We're not going to spend much time on the whiteboard. We're just going to jump right over to it. And the first one I look at is this spiders. What's going on with the S&P? Every one of the indexes had an excellent turnaround today. Well, when I say excellent, we had an excellent turnaround. Actually, yesterday the market has been in attempted rally for the last couple of days. We may get a follow-through day today. It depends. We did not take out that high right there. As you see, that high, and that was the high from the 17th of May. And so we may not go back into a market and uptrend yet, but we're on the cusp of it. It depends on which of the indexes you're looking at. And let's see what else we got going on here. So S&P, gap and go this morning, and then we basically closed back above the 20-day moving average. Now, if you're in a trade on the S&P, where's your upside target? Well, there's a couple of them. One is the high here from the 17th. The other one is for it to push on up and hit off the 50-day moving average. The 34 or the 50 is our next targets up. Notice we have broken up above the downtrending line. And so the character of the market has changed since our last, since the last time we met on Tuesday. What else we got going on? What about the NASDAQ? NASDAQ, notice, did not break the uptrend line, although our momentum has shifted back up to the upside. Nice hammer on a weekly chart. And so if we get a breakout, look for it to break out above the 20-day moving average and the downtrend line. I would be interested perhaps in trading the NASDAQ on any pullback into the midsection of today's big candle. Next in line is the Russell. The Russell, as we had said earlier this week, the Russell had been basically stronger than the other indexes. Notice how the 8-day moving average had already started to jackhammer up to the upside, and now we've ripped up and taken out the 20. Again, we broke the downtrend line, and a couple of things to just notice is one, notice how when the TSI, this is what I love about using the TSI, and I'm going to do a special on the TSI in the very near future. It broke the trend line. Where did it break the trend line at? Well, right about there. Then it came back and did a retest. And all this time it's showing positive divergence here on the TSI. Come back, retest, and then bounces up from there. And what is the other thing that we want to look at is we came right back down. This is a bullish squeeze. And if we get the TSI back above the 0 line, which is right there, we could be off to the races for some additional great gains. Almost took out the high, or we may have actually intraday taken it out, but we slipped back down below it a little bit earlier. Notice where the sellers came in. I want to notice, okay, so the sellers came in where we expected them to, close to, past breakout areas. How far is it going to push us down? IWM, I would be looking at potential bounces at the 20-day moving average now with a stop just slightly below today's low, because this gap and go here, that should not be voided because we have to ask ourselves, the question is, define where the price action should go. And if it is if it is voided, that means get the heck out of Dodge. It's time to call it a day. And so that's what we've got for that. Now let's take a look at a couple of stocks that are of interest. And the ones I am interested in, I'll just throw these out. ON. Now, on our premium members and our AutoPilot trading members, we put out trades on these yesterday for both an option trade, and we did a pullback. We pulled back down to about the 55.60 level. That would trigger an order, and sure enough, it did. And look where it did. It just basically came back, hit the midsection, hit into that green candle, and then rocket shipped out of there. And so we are in a trade on this. We'll take off part of the profits at the 7%, 7.5% level. Something's going on after hours. We'll have to take a look at that. And so we'll be watching this as it heads back up. And as you can see, we took out these past highs here. So this should be in gear to move to the upside very nicely. Excuse me. Okay, so on. Any pullback into the midsection of today's candlestick would provide us an opportunity to get long on this with, again, a stop loss slightly below today's low or slightly below the, in this case, the 20-day moving average. Keep your stop loss less than 5%. The other one that I like is the SOXL, which we also triggered into for our premium AutoPilot ETF members. We triggered into this earlier this week down towards this bottom here, right about the 19, actually off of this candlestick right here, down at about 1886 level with the anticipation that we were going to continue to head up. Our momentum had shifted to the upside. So what happens? We took out the downtrend line, positive, and then we basically came down here. And so I'm looking for any type of pullback towards the breakout line. And if I took a trade on this approximately there, as you can see now, I wouldn't want to necessarily let it go below today's low because that's about a 10% drop. So I would utilize the 8-day moving average and a 5% stop loss on the SOXO with the upside projection of where? Well, back up here to the 50-day moving average, somewhere between the 34, the 50, or this past high right here at 24.70. And what kind of a return would that give you from there to there? About an 11%er. If we get back up to the 50, we're talking about 20%. That's how we want to define. And just don't go, well, if it hits the moving average. Go to the moving average, project where you think it's going to be, get a specific objective number. That becomes your profit target. And then what I would do is I would back off from that projected target, maybe a nickel, maybe a 25 cents, because I want to be taken out and make sure that I am profitable going up and through. I want to be taken out of the position on strength. Now, will I sell the whole position? No. I'll sell like a third of it and then hold the rest of it and trail a stop behind that to make it either break even or a 10% trailing stop on it. So that's the way I channel that. And so that basically, again, measure the projected move and then back off it a little bit, but have a specific number in, you're not just in mind. You define it. You define it on the chart. And I'm measuring down here and go, okay, tomorrow this is going to be, the price of that 50-day moving average is going to be about 26.80. The next day after that, it's going to be, if it follows a straight line, is 26.40. And it's very simple to do. And so, so basically that does it for today. Remember, tomorrow we have our streaming YouTube Market Tech Talk. We have Trade Your Way to Wealth in less than 2 hours per week. That is what we offer on every Friday at 11 o'clock Pacific time. And so with no further ado, I'm just going to say aloha, God bless. If you have any questions or anything like that, just drop me an email, put a note down in the comment section on the YouTube channel. And have a great rest of the day. And we're going to watch this this rally. We've defined where our profit targets are. We know where our stops are. So we're in good shape. Are you?